All right, so welcome everybody to this Zoom call with Lindsey McDonald from New American Funding. We have Lindsey on today because the real estate market is starting to heat up a little bit. More and more listings are hitting the market. More and more people are looking to buy a home. And when I'm out day to day, I talk to a lot of people and I get this sense that people are a little hesitant, maybe fearful, afraid to talk to a lender. They'll get online, they will look for homes, they'll even talk to me. But when it comes to talking to a lender, I just see kind of this fear in their eyes and things like that. So what is your advice to people who maybe are a little afraid to make that call to a lender?
Yes, great question. And really, I mean, don't be scared. Really, it's the first step to home ownership, and one of the best calls you'll make. Really, it's as simple as doing just a brief loan application as well. So it's just checking your options. You know, different lenders have so many different loan programs, and so just a 5-minute conversation, you can find out so many details, and it's just the beginning point of, you know, seeing what your options are. So there's nothing to be afraid of. We see it all. We see really bad credit. We can help get credit cleaned up as well. So just taking that leap of faith, it's quick, it's not really time consuming, and it's just the beginning, you know, where you need to start.
Okay. I think from my conversations with a lot of people, especially first-time home buyers or people who are renting now thinking about buying, they always bring up the credit thing. Oh, I don't want my credit get dinged, whatever. Which, you're thinking about buying a house. This is a process you have to go through. But what can you talk about as far as that fear that they may have?
Yeah, no, that's such a great question. We hear that all the time. And, you know, a mortgage credit pull is actually the lightest credit pull you can do. A lot of people don't realize that they're allowed 3 free credit pulls per credit bureau a year without it even hurting your credit. So unless you've had your credit pulled multiple times, I mean, even if it's gone over 3 times in a year, the most that's going to hurt your score is 3 points. And there's always so many little tricks we can do to help boost that score back up. And then let alone, you know, if it is low, don't be afraid of that as well either, because we're going to be able to get you on track with pulling credit to see exactly what needs to be done. What's cool about our system is we can actually run credit analyzer. And sometimes it's maybe paying a credit card down $100 and it can boost someone 50 points. And so because a mortgage credit report can be different than a consumer credit report, it's always so good to have a mortgage company pull credit so that you know what your true mortgage credit scores are. And not worry about the credit ding itself.
Okay. It sounds like what you do is more than just arranging a loan, but helping people go from wherever they are now with their credit to the place that they really need to be in order to buy a home. Is that correct?
Yeah, absolutely. We're kind of, credit and financial advisors when it comes to that, because even someone who has awesome credit, there may be little things we can do to help boost that score up to get them even a lower interest rate. So yeah, our system's very accurate in running credit analyzer, and we can at least get them on track of, maybe someone's getting a big tax refund back and they're thinking, hey, I'm going to pay off all my credit cards or my collections with this. Well, we can tell them the best place to put that money to get the highest point increase. Okay. And sometimes it's just paying things down. And so, yeah, it's a really good starting point.
Okay, great. So what would be your advice for someone who, let's say they want to buy a home in the next 60 to 90 days, or someone who's saying, you know what, we're going to wait for the market to settle down. We're going to do it at the end of the year or next year. What could they be doing now to put themselves in the best position possible to get a good rate, to qualify for a home, things like that?
Absolutely. My best advice for that is just to get with the lender and get your application in so that you can get fully pre-approved. Send them your income docs. Even if you think, hey, I'm not going to buy a home till the end of this year when my lease is up, it's never too early to start that process, because a home may come up on the market, and then that way you're ready to go because you've already supplied all of your paperwork to the lender and they issue you a pre-approval letter. So I see that happen more often than not, where, the right home comes along and they weren't quite ready. So yeah, just getting your stuff
So they
in.
miss out on it.
Right, yeah. And then that way you're just ready to act on it if a home does come up. Because yeah, it's really easy to update your approval, even if it is a year down the road when you end up purchasing. That way we work together to get your score as high as possible, and just get all your assets and anything in line so that you're ready to go once that time comes.
Okay. Now you mentioned pre-qualification. What is the difference between being pre-qualified and getting a pre-approval, or are they the same thing?
Yes, so actually they are two different things. So a pre-qualification is just doing a brief loan application with the loan officer, where they get some of your information and they say, okay, yeah, based on your income and credit, it looks like you'll get approved for $300,000. Anyone can supply a pre-qualification letter. A pre-approval is taking it to the next level, where you've supplied your income docs, you've actually gone through underwriting, and you're ready to go. It's just, it is providing a little more information, but then that way they've reviewed your income, your assets, and they're issuing you a pre-approval letter saying, yes, Mr. Jones is pre-approved for $300,000, which is the letter you're going to want to provide to the seller when you do make an offer.
Okay. Okay. And that's what I was going to ask. It sounds really important, especially in this market of really competitive offers and so many buyers and so few listings. You would want that pre-approval letter. You need that pre-approval letter to give it to the seller so that they have complete faith that, oh, you can get the loan. It's going to go through. You're working closely with a lender already. Is that correct?
That's exactly right. Yeah, it's amazing how many listing agents I talk to, and they get all multiple offers on one of their homes that they have listed, and they just have pre-qualification letters. And because anyone can provide that pretty easy, it's not very nothing, it's not very strong to the seller. They want something that says, hey, yes, Mr. Jones has actually gone through underwriting. They've supplied all their income docs. And that is something we do a little different than most banks, where we will send you through underwriting. So we're issuing you a pre-approval letter signed by our underwriter, which is definitely helping, because it shows you've gone, you've taken it to that next step, and that you've already gone through underwriting. Your loan is ready, just looking for the right home.
Okay. Now, something that I know you do that not every lender does is, I know that when I'm helping someone put an offer in on a home, you will actually call the seller's agent and kind of let them know and give them a lot of confidence that this buyer can see it through.
Yeah, really. And that has made the biggest difference. It really has. It's amazing when I'm making those calls, how many times the listing agent says, wow, I can't believe the lender's calling. We do that just as a service. We want to get your offer accepted just as bad as anyone else. So us calling is just reiterating the fact that, hey, yes, this client, they're golden. We have reviewed credit, assets, income. They are good to go. And it's just, it's hearing that voice and, that verification from someone else, just versus just getting a letter or a document showing they've been pre-approved.
Right.
So it's taking it that extra step, but it really has been helping, because, I'm able to explain, hey, we do all our underwriting right in-house. We've got an awesome panel of appraisers. And it just gives that listing agent more reassurance. If he's looking at 20 offers and they're all really close to the same amount, well, only one called and reached out. I feel like this is going to be a pretty smooth transaction with this company. So yeah, we've had really good success with that.
Nice. I think that's so important nowadays. I don't know if a lot of buyers understand that when they're looking at a house, the house that they like, there could be 30, 40, 50 other people that like that house too. And I've seen homes receive 20 and 30 different multiple offers. And a lot of times to those sellers and their agent, it's just a document. It's a PDF with the boxes checked and the amounts put in. But when you reach out, whether from me or from you, and you talk to them and you build confidence in them that our offer is really strong, we're going to see it through them, they really love this house, they've already been pre-approved, things like that, I think it goes a long way.
Yeah, it really does. That's why it's so important working with a good team, you know, a good realtor and a good lender. We all just work so well together. So we're just all working for the same goal, to get your offer accepted and to make it just such a smooth transaction.
Perfect. Well, that kind of segues to my next question is, so someone goes under contract, okay, that day, that night, we get the signed offer back. What should they be doing and what should they not be doing to make sure they close on this house?
Yes, I love it. So, and just listening to your lender, you know, when they're asking you for documents or to provide anything, just getting that into them as soon as possible, because we're going to make sure we're facilitating that file to go through underwriting again as smooth as possible. And, you know, just not going out there and applying for any new debts. A lot of people get really excited when they are buying a home. They want to go buy a new car and furniture. Um, and we're really good about reminding you to not have anyone pull credit, because lenders, we always find out. We do a soft credit pull the day of closings because we want to make sure that you didn't go out and accumulate new debt.
Right.
So that is probably the biggest thing. Just don't have anyone pull credit during that time period.
Okay.
Don't want to move your money around. Just kind of keep it settled where it is, and just talk to your loan officer. Talk to them about anything that maybe comes up, or if you do need someone to pull credit, just communicate that. It's all about communication. And but yeah, those are the main two ones.
Well, those are excellent for people to know. I hope they're listening to that. The
Right.
last thing I want to see is they went out and bought $10,000 worth of furniture on an RC Willie card 3 days before closing and bye-bye house.
Right, right. Just wait until you close and the loan's funded. Then you could purchase anything you want.
Now, how long should people plan on that process taking from the time that they go under contract? What is a safe, but I mean, a good amount of time? Because I know home sellers, they don't want to drag this out. You know, they want it to be closed by a certain date.
Right. So, you know, a good rule of thumb has always been, it's usually been about 30 days, but because we do so much up front to get them through underwriting, that cuts off about 2 weeks. So we can do a loan in as quickly as 2 to 3 weeks. I think 3 weeks is the perfect number, though, where this buyer's not going to feel rushed. They're going to have time to schedule a home inspection. You know, that gives us enough time to complete an appraisal. 3 weeks is kind of been a perfect number for both seller and buyer, where a seller's saying, hey, that's pretty quick. And then it's, you know, given enough time so the buyer's not feeling so rushed, that they're doing their due diligence, and they're, of course, binded by their deadlines in their contract. So if anything comes up, they can still get it addressed or cancel that contract.
Okay, sounds good. Now, I know a lot of people are aware from the news or from me or whatever that interest rates are starting to creep up a little bit. And I know no one has a crystal ball. Maybe someone at the Fed does. I don't
Right.
know. But what is your opinion about what rates are going to do, let's say through 2021? And more importantly, how does that affect someone's buying power, you know, or what's the cost of waiting? Let's put it that way.
Yes. Wonderful question. So yes, unfortunately, rates, they're definitely bound to go up. They've already gone up about 1/4% from the beginning of this year. But rates are still phenomenal. They're still super low, in the low threes.
My first house was at 9, so this is still
Right.
amazing.
Yeah. And you know, so rates, yes, they're going to go up throughout the year, but more importantly, home prices. With Utah being the #1 state in the nation right now, everyone's moving here. And so let's say you want to wait even 6 months. you're at risk of a higher rate, but more importantly, the same home that you could buy today might be $50,000 higher in 6 months, because every single month, the price of that home is going up. It's increasing.
And so if you only qualify for a certain monthly payment, not only is the interest rate going to affect that, which means now you can only afford a little less expensive home, but that home that you really, really liked, or that floor plan, or that certain number of bedrooms may be out of your reach, or at least on the very top end of what you're hoping for. Is that right?
That's right. Exactly. So, yep, they're what they would qualify for, it kind of dwindles as that is increasing. Yeah, we've got clients all the time that say, oh, I'm going to wait till next year, or even save for a down payment. And, my biggest advice is just talking to a lender, because there are so many loan programs out there for even down payment assistance where you might not need a down payment, and you could possibly purchase a home right away. It's amazing how many people buy a home and then they come back the next year and we just look at values and it's gone up so much. So people become very wealthy quick off real estate. It's a killer investment.
Right. Now, I know a lot of people out there are very familiar with maybe a conventional loan, and they've heard FHA loan, but they also hear other words. They hear Fannie Mae, Freddie Mac, all these types of things. Can you just talk for a second or briefly about what the different types of programs there are? Because I know there are other things like the USDA loans and all different kinds of things.
Right. Yeah. So there are several different loan programs. The two biggest that a lot of people hear about are it's an FHA loan and conventional loan. An FHA loan is a government-backed loan. It goes down to a 580 credit score. You could purchase
a 580 credit, you can possibly still get an FHA loan.
Absolutely. Right. Yes. And it requires the smallest down payment. So it's 3.5% of the purchase price with a 580 credit score. And then if you have a 620,
which is very different than what people think. They always hear 20%.
Right. Oh yeah. People think you have to have 50,000, 100,000, and it's not like that. So even with, lower credit scores, even just a small down payment, you could get into a home. Then if your credit is like a 620, then there's down payment assistance programs that open up. So where you don't have to have a down payment. So, and then, you'll hear of different programs, like there's a USDA, like you mentioned, that's a rural housing loan. So a little more rare loan program, just because not every area is rural. So we've got some good maps we could send you, but that is a great program for 100% financing. And, once you've applied for a mortgage loan, your lender's going to come back to you with all your different loan options and go over them with you. And then usually, it's a matter of, once you get a home under contract, they solidify which program they go with. Whether it's USDA or, down payment assistance. But yeah, there's some great programs out there. Now, when you hear the words Fannie Mae and Freddie Mac, those are the servicers behind the scenes that basically guarantee the loans. And so, the consumer doesn't deal with them or hear of them very often, not like we do on the lending side. But yeah, that's just more of the mortgage company who's backing the loan behind the scenes.
And you said something that I think people should really remember is, when you're working with a lender, I mean, you are someone who wants to see them get a house, wants to see them get a loan, and you are working for them. I think a lot of people think it's going to be this intimidating, scary thing because I'm talking to someone who knows so much and I know so little, but it really isn't that way. I mean,
right. Yeah. It's fun because we become friends with our clients. We want to help them foresee this. We do all of this for free. There's no cost on getting your credit pulled, doing the credit analysis, going through the pre-approval. So we want to see it go through, because that's when we do get paid. Our fees are part of the actual closing costs.
Okay.
And what's so nice too, and I don't think a lot of buyers realize this, but having a realtor does not cost them money. So many consumers think that, hiring Matt as a realtor, they're going to have to pay $10,000 at closing. And that is not the case, because the sellers already agreed to pay the buyer's real estate fees. You having a realtor does not cost you any money. So
good to know. Everybody, remember that. We are working really hard, basically at no cost for you until you buy a home. And then, at least for me, the seller is paying my commission, my fees, out of what they've already allocated from the sale of their home. So wonderful.
yes.
Let me ask you one. I think we have time for one more question. And this is maybe for people who are putting offers on homes. One thing that keeps coming up is appraisal. And a lot of people, they know that they have to offer more than maybe what's asking on a home. And everybody's a little nervous that, oh gosh, if that appraisal comes in lower than what I'm offering, I'm on the hook for all that difference. Can you talk a little bit about what appraisal is and what waiving it means and that type of thing?
Oh yeah, you bet. So yeah, once you have a contract in place, that is one of the first steps we take as a lender is we order the appraisal. Now we have our own approved panel of appraisers, and they randomly choose from one of them. That way we're not selecting who the specific appraiser is. So it's basically a third-party person who will go out there, and they just want to make sure that the home is worth what you're paying for it. So they're going to look at the comps within, a half a mile that sold in the last 3 months to provide what the true market value of that home is. Now, in some cases, let's say the appraisal comes in lower than what the purchase price is. We just address it at that time, whether whether it's written in the contract, where it sometimes we're seeing this more often lately. Maybe the buyer says, hey, I'll agree to pay maybe $1,000 more than the home appraises for. That is one thing that's really helping offers get accepted, is sellers contributing a little bit over appraised value. Because what we're seeing is there's so many home sales going on and the market's increasing, but a lot of those sold comps just haven't caught up yet.
Right.
And we know that every month those values are going to raise. And so people willing to pay a little bit over appraised value. It's such a great asset that's going to keep growing. It maybe not at this pace, but it's going to continue to appreciate. One other thing too is if appraisals do come in low, we can always do a rebuttal where we say, hey, Matt, are there any comps that we feel like the appraiser maybe didn't consider? And we can supply those. But at the end of the day, they just want to make sure that the home is worth what you're paying for it. And then if not, agreeing to maybe what the buyer wants to pay, or, a lot of times the seller will reduce it to what that appraisal amount is.
Okay.
Yeah.
And that does make a lot of sense. I mean, obviously a bank isn't going to loan more money than the home is worth. But it does kind of make you think of something where I know a lot of people say, hey, I don't want to overpay for a home. And in my mind, I think, well, the home, whatever home you're going to buy in this market right now, is probably the one thing that you can buy that you're not overpaying for. Because that car that you spent $10,000 or $50,000 on, it is worth less the next day. The jacket you bought, the table and chairs you bought, the lawnmower you bought is all worth less the next day, the next year than when you bought it. The home is the thing that's going to be worth more. Now, obviously, the more you pay, it may take a little time to catch up. But I think we're all seeing that Utah home prices have steadily gone up year after year after year. And that home is going to continue to appreciate. It is where you live. It's your sanctuary. It's your castle. It's where you make memories. And so if you want to overpay for something, the home is where you should do it anyway, but it's going to catch up. So you're not overpaying.
Such a good point. Yeah, that you just spelled it all out. You're so right. Because there's so many things we purchase that are depreciating assets. And over time, they just are worth less and less. And a home is the one thing that will always appreciate. So
absolutely. Well, Lindsey, thank you so much for this call. Now, if people want to reach out to you, they don't have to do it through me, right? They can just contact you directly?
Absolutely. Yep. You're welcome to shoot me a text, call me on my cell phone. Go to my website at lindseymcdonaldgroup.com. But yeah, I would love to answer any questions and look at your options.
Okay, so I am going to, when I post this up, I'm going to make sure that all your contact information is there, website, phone number, email. You're on social media, I'm guessing.
Yes.
They could probably send you a snail mail letter. Obviously, you're available for Zooms and all kinds of different things. So anyway, thank you so much. Really appreciate it. A lot of great information here for everybody. And if you have any questions, call Lindsey or call me. You know, I do these videos, and I know Lindsey feels the same way. We just want to be a value to people. I know there's a lot of questions out there. The market is really kind of crazy right now. And we just want to be a value to anybody who needs information, who needs help in whatever capacity. So please reach out to us, and we would love to help you in any way possible.
Awesome. Yes. Thank you so much, Matt. Thanks for having me on here. I appreciate it.
Okay. Thank you. Bye-bye.
Bye-bye.